Hello, I am Miyun from the Department of American Cuisine. Today is May 13th, and let's start the United States stock news. Today as well, I am Miyun, who is keeping the integrity of United States stock investors without change. A few hours ago, I uploaded a video on Miyun channel, and I think many of you have already watched it. I'll show you right away. Eating according to American time. Miju posted the video about 3 or 4 hours ago, and then 2 more videos were posted about an hour before that. If you click on these videos, you won't see me appear in them. On Joyce's channel, Mr. Kim In-jung appeared as a guest. That's why many people who watch Miju's channel might have been surprised to see Mr. Kim In-jung show up like this. So I posted a comment on YouTube on the community post. Recently, a content collaboration between Mi-jung and Choice Stock was finalized. Recently, the relationship between the United States and China wasn't very good, so it was difficult to reach an agreement. However, since Mr. Kim In-jung, the representative, has a good relationship with them, we were able to finalize the content collaboration more easily. That's how it happened. So that's how it is. So, starting this week, Mr. Kim In-jung, the representative of Choice Star, has personally produced a video that explains the list of recommended stocks in detail. It is scheduled to be regularly shared through the Miyun YouTube channel. Today, for the first time, 2 videos have already been released, so you can watch them. This is just my personal opinion. When many people work together, all the related parties should be able to benefit so that the relationship can continue. That's what I think. So, this time, Min-jun Kim and Choice Stock, and finally, the subscribers who are watching this broadcast together, there are these 3 parties. All 3 must be able to benefit for this relationship to continue. First of all, I'm speaking personally. Mr. Kim In-jung and the supporters of Choice Stock, do your best to produce and provide content so that the subscribers can receive valuable information. That way, the subscribers can benefit, and this relationship can continue to grow in a positive direction. I think that in the long run, we can receive a lot of benefits. And secondly, among those of you who are watching this broadcast together, there are already many people who have joined Choice Stock, and there are already hundreds of people. So, for those of you who are already members of Choice Stock through this content collaboration, there will be opportunities to learn in detail how to use the Choice Stock platform through videos that we will share in the future. Yes, that's how it will be. Many of you are investing your precious funds and joining the membership, so this will be an opportunity for you to make 100% use of the various useful features. I am personally excited. And finally, I hope that even in the Choices Done community, there will be benefits so that this relationship can continue. So, do you have anything to say as a final comment? Personally, I think the stock analysis tools provided by Choices Done are honestly the best in the country. So, I hope that more people can access and use these excellent stock analysis tools, and that Choices Done can become a platform that everyone can rely on. Now, from this point on, the content collaboration between Choices Deng and Mizon will officially begin. From now on, through the Mizon channel, you will be able to access a variety of useful and valuable investment information and content. I hope many of you will benefit from it. The collaboration between Choices Deng and Mizon provides a great opportunity for the Mizon channel to advance to the next level. We will now cover United States stock sectors in addition to stock news, providing top-notch analysis and content for our Korean audience. We remain committed to being the best source of high-quality information and will continue to give our best. Alright, then let's get started with today's United States stock news for May 13th as we begin with a fresh mindset. Today, I'll summarize the main points of the United States stock market, starting with the S&P 500 index. The characteristics of the 2 sectors stood out the most. First, you can clearly see that the number of rising sectors is much smaller than the number of falling sectors. You can see that there are a lot of sectors in green, and secondly, the green color stands out overall. Rather than saying the entire market was strong, it's more precise to state that many sectors surged, resulting in a highly positive overall trend. Actually, yesterday, out of the 11 sectors in the S&P 500, all of them went up except for one. The only sector that fell was utilities, which dropped as investors shifted to growth stocks. So, as you can see, the sectors that performed best yesterday were consumer discretionary and technology. We usually refer to the economy as the American consumer, but why are American consumers rising like this? Even though China's exports have recently declined, many sectors have risen due to the impact of exports. If you look at it this way, you'll understand. Technology stocks rose by 4.64% as the semiconductor sector, a major component, surged. The semiconductor sector performed well for the second time. Third, industrial materials and industrial stocks also benefited a lot from the impact of tariffs, as they could not be freely imported and exported. That's how you can summarize it. Please check once how much the market has dropped. It's 71.57. Now, among the 500 industries that make up the S&P 500, more than 350 sectors have risen, so the breadth of the market has widened significantly. It used to be 60.8, but it has completely soared from 60.8 to 72.5. And if you look at the chart below, over 50% of stocks have prices that have risen more than 50% above their 200-day moving average. So does this mean that so many stocks that had been in a long-term downtrend have now recovered? The likelihood of a sustained United States stock market rally has risen considerably, which can be viewed favorably. Now, next is the number of stocks hitting new highs. The number of stocks reaching new highs is also an important indicator, and I often talk about it. What exactly does the number of stocks hitting new highs mean? If the VIX index drops below 20, we can expect a stable stock market for the time being. And that's exactly what happened recently. Now, the VIX index dropped as low as 18.65, and when that happens, since the 200 one-day moving average is at 19.76, we can confirm that the VIX index has fallen below the 200 one-day moving average. Now, next is the Fear and Greed Index. The Fear and Greed Index has risen to 66. If it continues rising like this, it might eventually drop to a more neutral or fearful level. So, in order to make money, the market sentiment is becoming extremely positive, to the point where people are even thinking about whether the current level is enough or if it will go even higher. This is a typical sign of an overheated market. Now, next, let's look at the market score provided by ChoiceStock. The market score is also staying above 61, which means it's maintaining an overheated level. Now, let's organize the information. The sentiment in the market showed a sharp upward trend in just a few weeks. But now, rather than seeing a downward trend, most indicators are showing a neutral trend. That's how we can summarize it. Next, Minjun Park will explain. Most of the stocks are showing positive trends. If you look at the top performer, it's the trade desk. Now, for the part you should pay attention to, the trade desk has been rising for 7 consecutive days. So, in just 1 week, the stock has surged by more than 43%. Next, if we look at Nextracker, it has gone up by 8.79%, and its weekly gain has exceeded 23%. Now, the third one is Credo Technology. Credo Technology also jumped by 8.72%, so its monthly increase has now exceeded 42%. Amazon, which usually doesn't fluctuate significantly due to its large market cap, also jumped by over 8% yesterday following positive news. 7.92%, Celestica 7.81%, Vista 7.62%, Tesla 6.75%, Broadcom 6.43%, and Uber 6.39%. Taiwan Semiconductor Manufacturing Company plus 5.93%, NVIDIA plus 5.44%, Advanced Micro Devices plus 5.13%, Talon Energy plus 5.09%, Palantir plus 0.99%. Finally, with Bitcoin surging, there are 10,342 cases. There are 2 categories. One is B2 high and the other is MicroStrategy, which has recorded the best upward trend in Bitcoin-related categories until recently. When the funds partially moved out, they mainly flowed into technology stocks in a different sector. This way it can be organized. Yesterday, there was a significant increase in the number of people interested in Trump-related stocks, but there was also a notable rise in technology stocks. Through this article, I will explain in detail what kind of technical changes are occurring in the S&P 500. According to the stock market guidance, the S&P 500 index for the first time in about 30 days broke above the 200-day moving average and closed at 5,844.19 on Monday. The 200-day moving average is considered an important indicator that shows the trend of the market. The fact that the S&P 500 index closed above the 200-day moving average for the first time in 30 trading days is the highest record since 2022. So 30 trading days is quite a long time. It's not common for the S&P 500 index itself to stay below the 200-day moving average for this long. It reflects the fact that the market trend hasn't been good for a while. Well, traditionally speaking. The more the index stays below the 200-day moving average, the weaker the market tends to get. It means that interpretation is possible with Wee Hyun Shin Ho. However, according to sentiment traders analyst Jason Gupfert, if you look at the historical statistics, after the index stays below the 200-day moving average for more than 30 days at the high point of a 3-year period, since 1929 there have been several cases where the market rebounded strongly within a year. In fact, after such a pattern occurred, the S&P 500's median return over the next 3 months was recorded at 41%, and over the next 12 months it generally showed a double-digit increase. There are exceptions, of course. During the dot-com bubble burst in 2000 and the financial crisis in 2008, there were also exceptional periods when returns remained in the negative double digits. But except for these rare cases, in most situations after about 2 months, the market tends to recover steadily. Although the S&P 500 hasn't significantly rebounded within 30 trading days this time, as it didn't fall below the 200-day moving average if the pattern repeats, we can expect a positive recovery in stock prices after about 2 months. This is how we can interpret the situation. What is the direction of this rally? The United States and China agreed to a summit within 90 days to ease tensions and resolve their trade dispute, aiming to improve relations. It was a decisive factor. The United States postponed tariffs on Chinese imports by 10%, while China reduced tariffs on United States products to 30%. According to this news, Dow Jones rose by 1,160 points, and the Nasdaq index also surged by 4.4%, successfully rebounding from the bear market. And this is possible. Now, to determine whether the upward trend in prices will continue, there is still a need to pay close attention to the S&P 500's 200-day moving average line. A stock breaking through the upper level doesn't guarantee its quality. It should maintain its position above the 200-day moving average and the upper level to be considered favorable. Now, the number of retail margin accounts is being released by CarryQuant. If you look at past rebounds by country before this, you can see whether they broke above the 200-day moving average or not. Whether they could or couldn't break through is said to have a direct impact on the sustainability and strength of the rally. So, when the 200-day moving average is surpassed, it's usually a short-term emotional rally. This suggests that short-term market sentiment can improve, presenting a favorable opportunity. But if the price falls below the 200-day moving average again, it means the upward trend is not being maintained. That's how you can interpret it. Now let me summarize Min's words in one sentence. The S&P 500 index rose by 3.3% this Monday and managed to close above the 200-day moving average. Now let's look at the results. Yesterday on the broadcast, I explained in detail that Fibonacci ratio of 61.8% was 5,750, and as you can see, the index bounced back exactly from that level. Now, why is this important? At the time, top market experts, who were skeptical, noted that 5,700 and the 200-day moving average might become resistance lines for the market. That was their main message. Many technical experts argued that the market would likely hit resistance at 5,700, or if not there, at the 200-day moving average. That was their main point. Now, by the way, how is the recent trend in the United States stock market? The turnaround in the United States stock market was a fundamental rally, and at the same time, there was also a technical rally. The fundamental good news and two technical factors overlapped, resulting in a stronger market reaction, in my opinion. And there's also another positive signal. Despite market fluctuations, actual transaction volume hasn't grown, and sales listings continue to decline. It appears that individual investors who had previously reduced their stock holdings or kept their funds in safer assets like deposits or bonds are now returning to the stock market rather than just investors taking profits or giving up positions. This is my personal interpretation. So, I would cautiously say that there are expectations that this rally might continue for a while. Now, let me show you a few charts. First, this is an updated chart of the recent correction provided by Folly Market. At the beginning of April, this figure went up to 66%. Typically, when this figure exceeds 60, it indicates a rapidly increasing probability of a recession. That's how it's generally interpreted. But after reaching 66 at the beginning of April, it has continued to fall, and now it's down to 40. So, at this point, we can interpret that the probability of a recession has dropped significantly. Next is the S&P 500 Momentum Index. Out of the 26 momentum indicators, not a single one is showing a buy signal. There are 9 neutral indicators and 17 buy indicators, so overall, the S&P 500 is showing a strong buy momentum. That's how you can interpret it. Lastly, looking at the S&P 500's one-year price chart, the one-year price chart also looks very good. If you look at it, there was a strong resistance level, but now it seems to be reaching around 5,750. It has broken through that level. So, going forward, there doesn't seem to be any resistance line. I'm showing you this chart because there is an expectation that it might not come down to the support level again, which is a good sign. So, how is the market atmosphere? It's better than ever. We can now make technical adjustments to the price, but the possibility of a rapid upward rally in the short term has become very low. So, in this positive market atmosphere, which sectors should we focus our investments on to achieve even better returns? Let's listen to some insights about this. Recently, as tensions between the United States and China have eased, the United States stock market has shown a strong upward trend. China and the United States have agreed to suspend tariffs on each other's imports for a 90-day period. The news is predicted to positively impact global stock markets, according to the current outlook. Following this agreement, the United States will lower tariffs on Chinese imports from the current 145% to 30% and 125% to 10%. The goal is to ease trade tensions, promote mutual trade between the two countries, reduce entry costs for major industries, and stabilize supply chains. Therefore, there is a high possibility that positive economic effects will occur, and industries are also expecting favorable outcomes. Now, in this situation, let me summarize the main sectors that are expected to benefit from these trends. This announcement will be followed by a summary of the stocks that are expected to benefit the most from the tariff cuts in the Monday pre-market, and will also organize which stocks had the highest gains. First, in the logistics and transportation sectors, education stocks are expected to stand out. And since costs can be reduced, it's possible to see improvements in profitability as well. A familiar name can be seen here. When Uber went up by 47% in the pre-market, I immediately checked the reaction. One of the reasons Uber was able to rise so sharply is because it has a delivery business. The logistics sector accounted for about 10.9% of total sales, and although it was not a huge portion, it had the potential to grow significantly. However, this part of the business has now been sold off, as you can see here. The second one is the semiconductor sector. The semiconductor sector will benefit from a huge number of items. The easing of regulations has led to an increase in imports of related goods from China. If costs decrease, prices of industrial equipment, chemicals, and goods are anticipated to improve. Thanks to this, a lot of related sectors have improved significantly. NVIDIA, Advanced Micro Devices, Marvell Technology, Taiwan Semiconductor Manufacturing Company, ASML, and Intel all increased significantly in tandem, as evident from the data. Next is the retail sector. Lower import costs from China can improve overall profit margins. If price competitiveness strengthens, it is expected that major distribution companies will benefit. Amazon, which benefits from Chinese suppliers, recently experienced an 8% drop in prices, leading to an increase in its stock prices. It was one of the most notable upward trends. Next is the automobile and parts sector. When it comes to finance and electronic parts, regulatory costs can be reduced. Therefore, major finished car companies and parts suppliers are expected to benefit. For example, Tesla responded immediately and recently raised prices by more than 8%. Next is the industry outlook. Due to the automation of machinery parts, major industrial equipment manufacturers are expected to benefit, and productivity is expected to improve. Caterpillar, Deere, and GE are among the major companies expected to benefit from this situation. Next is the consumer sector. There are sectors that are directly affected by China's supply chain and cost reduction efforts, especially in industries like Apple and semiconductors. These sectors are responsible for a significant portion of China's rapidly growing manufacturing industry, so they tend to show the biggest reactions in the news. That's how you can look at it. The aviation industry could also significantly benefit from this. Aviation fuel, maintenance, and government-related costs can decrease, leading to reduced expenses. Moreover, the demand for aviation goods is also expected to rise due to the activation of global travel. Sales are expected to increase while costs decrease, allowing airlines to enjoy both benefits. That's the proper perspective. Now, another thing is that as the prices of Chinese technology stocks in the United States market drop, it immediately affects the exchange rate. That's how you should see it. Now let's discuss United States commodities. Among the different categories, many items are anticipated to gain the most from the recent United States tariff reductions. Food is a representative sector that has benefited in advance. Now, first of all, Taiwan Semiconductor Manufacturing Company is the representative beneficiary. To explain the reason simply, Taiwan Semiconductor Manufacturing Company's main customers are mostly American companies like Apple, NVIDIA, and Advanced Micro Devices. Well, that's how it is. American companies receive finished products from Taiwan Semiconductor Manufacturing Company, manufactured chips sent to Chinese assembly plants. This means they're not just selling GPUs directly. Whether they're installed in PCs or servers, they're put into the final product and then sold, but in many cases the final product is assembled in China. This part is something we need to pay attention to. So because of this, the production costs for local companies in China that were responsible for assembly could go up. If that happens and the overall supply cost goes down, it will be good for both Taiwan Semiconductor Manufacturing Company's sales and margin at the same time. All the industries related to materials are also benefiting. We will be able to take a closer look at this part together. Advanced Micro Devices is the second one, supplying both GPUs and CPUs. So a significant portion is produced and tested in China. Due to the import of parts, the supply chain can be affected at its source. As production costs decrease, Advanced Micro Devices' competitiveness strengthens, making them a key beneficiary. So that's how it can be summarized. I must mention Advanced Micro Devices when discussing this topic. The core market for artificial intelligence semiconductor demand is China, and that's the current situation. In reality, there is competition between China and the United States. But if you completely give up the Chinese market for NVIDIA, it would be a huge loss. That's how it can be understood. Giving up the booming Chinese artificial intelligence chip market is not an option. This is extremely important. If export restrictions to China are eased, the domestically produced H20, which is currently downgraded in performance, will remain. Now, if the price of these artificial intelligence and dedicated GPUs rises abnormally, the possibility of accepting them will decrease. This is a typical and representative example. Broadcom, the fourth company, is a key supplier to China, offering communication equipment and smartphone parts. Now, the supply cost here will be lower, so sales could go up and profit margins could improve as well. Therefore, all four semiconductor stocks in the United States can be considered beneficiaries. Now, besides that, there are other United States top picks that are expected to benefit. For example, there's Tesla. China's electric vehicle subsidies and stricter battery material regulations may lower production costs of finished vehicles. And also in the Chinese sales market, price competitiveness could be strengthened. Therefore, Tesla is also expected to lower its prices significantly. The second is Celestica. When you think of Celestica, you usually only think of Canada. It's not just about China's influence. Celestica is a global leader in the electronics manufacturing industry. If the cost of importing parts from Chinese subsidiaries is reduced, the industry can gain a competitive advantage in profitability. That's the right perspective. And finally, Amazon is a representative example. As the cost of importing parts from China decreases, online retail margins improve, and as price competitiveness rises, Amazon's position can continue to strengthen. That's how you can summarize it. So if these various United States tariffs are recognized as exceptions or suspended, it means that the prices of most items have actually gone down, which is quite possible. The next prepared article is news related to NVIDIA. When I shared this article with some members who hadn't seen it yet, I included the title Recommended Content so they could check it out. There's a reason why I'm recommending this article. The content closely examines the current situation, which is why I recommend it. That's the reason. People like us, individual investors, don't have a good way to check the situation on the ground. So personally, I think it's more important to directly see and check the situation on site like this, rather than just relying on analysts' personal insights in articles. So this article is one that we should definitely read at least once. I wanted to share it with you like this. Recently, according to the data that came out, NVIDIA's GB200 lineup stood out with a significant improvement in performance. Morgan Stanley sees this data as something that could help ease investors' concerns. The GB200 I'm talking about here is this one. Now, NVIDIA makes Graphics Processing Unit S, and what we usually call a black box is actually the Grace Central Processing Unit that NVIDIA currently has. So it's a superchip made by combining the Grace Central Processing Unit and this black box Graphics Processing Unit. That's what you're looking at here. Recently, data processing performance has significantly improved, even in large-scale manufacturing. The yield rate has improved tremendously. We are delivering very positive news. Taiwan's ODMs are manufacturing companies. Through 3 ODMs in just 1 month in April, shipped about 1,500 racks. That's how the volume is being distributed. 1,500 units, so it's not a huge number. To make the GB200, usually it contains 36 CPUs and 72 GPUs. The number of GPUs used is enormous. Producing 1,500 of these units results in a huge output, which is understandable. And this is an important part that reflects their intentions and adjustments, and it can help reassure investors. In this way, the announcement of the monster's earnings is drawing a lot of attention in the market. Joseph Moore maintains a consistently positive outlook on NVIDIA based on their results. This data is being confirmed in the market this time, so that's why good data is coming out. Even if concerns about reduced demand for dynamic random access memory are not completely resolved, it is likely to decrease further. So far, the supply of blank masks has been quite smooth, so there was a perception that if the supply of masks decreases, prices will inevitably rise. However, by April, they had already shipped 2,500 units as promised. If they maintain a monthly average supply of 1,500 units for the rest of the year, they will supply a 15,000 units by year's end. 15,000 units aligns with market expectations, indicating they can meet market demand. In addition, steady monthly improvements are also expected. For instance, 1,500 units in April, 1,600 the following month, and 2,000 after that, indicating a potential continuous upward trend. Therefore, it is expected that the monthly figures will become even stronger. And another thing is that NVIDIA has not released any new products in the April period, which has also been confirmed. The absence of inventory buildup indicates no such concern. However, if inventory does accumulate, it could lead to falling prices potentially becoming a serious issue. Current situation information is also being shared. Recently, after checking the industry, it turns out that these are core companies like Webra and XA. They requested a rack configuration using the HGX B200 with about 48 to 64 GPUs included. As I mentioned earlier, typically the B200 can hold up to 72 GPUs, but as you can see here, it's 48 and 64 GPUs. Several companies are seeking graphics processing unit rack setups for various applications. So you can see here that they are continuing to add more GPUs. Therefore, it is being reported that the possibility of improvement remains high even after April. In conclusion, this is direct confirmation from the industry that the recent strong performance is due to different buyers and market participants than before, and it is expected that this demand could continue to strengthen for several more quarters. And with the prospect of GB200 being released, inventory accumulation is currently a concern for investors, but the fact that these numbers are improving is also positively received by the market. Therefore, even now, I recommend investing in NVIDIA or holding onto your shares. Now, I'll try to summarize the original article as simply as possible. Among the members, you seem to know this well. Personally, I think NVIDIA's proportion is the highest in my portfolio. When NVIDIA's proportion in my portfolio is high, some people assume it's because I bought at the peak and kept averaging down. However, that's not the reason. Allow me to clarify. That's not the case. The reason I have the most money invested in NVIDIA is because even at this point, NVIDIA is the most attractive and reasonable choice in terms of risk and return. That's the right way to look at it. Well, that's why I did it back then too. Due to the announcement by the Trump administration and related departments, the market is rapidly shifting toward companies that benefit from this, and that's why NVIDIA's stock price has become more reasonable. That's how I see it. NVIDIA's stock price dropped significantly until April 4th, but has since rebounded, rising over 30%. Despite that, buying momentum remains strong. That's my view. Let me explain this in detail. First, what stands out in this article is that the growth is very significant. In April alone, original design manufacturer export data exceeded expectations even in a very challenging situation. Therefore, with the release of the GB200 lineup, we are seeing significant improvements, and as a result, it is realistically possible to reach shipments of up to 15,000 units. Sales volume may exceed market expectations, making this outlook possible. And secondly, the United States China 90-day semiconductor agreement is also drawing investors' attention. But among those, this is the part we need to focus on. Despite the strengthening of export regulations on semiconductors, NVIDIA's H20 chip is still being used in China. By adjusting its specifications, China is able to continue importing and benefiting from these chips. Therefore, it seems they are trying to secure the ability to bypass export restrictions once again. This section also shows a strong upward trend. The third point, valuation, remains high. For example, NVIDIA's forward PE is still at 27.97 times. Despite expectations of earnings doubling within a year, it's still under 28 times and relatively low. And the forward price earnings to growth ratio, which takes growth into account, is 0.75. If this figure falls below 1.0, it means the stock is considered very undervalued. This is how you can tell if a stock is potentially undervalued. Recently, profitability has improved steadily. Total and net profit have risen, with net profit increasing rapidly by over 50%. And in the meantime, earnings before interest, taxes, depreciation, and amortization has grown threefold in just 1 year. Based on this, the company is showing remarkable growth. Now, when we talk about food-to-be earnings before interest, taxes, depreciation, and amortization in terms of earnings before interest, taxes, depreciation, and amortization income, how many times the current industry's value has increased is what we're calculating here. It has dropped to 22 times, whereas the 5-year average was 48 times. Compared to the previous valuation, it's currently much lower. Let's examine it from a practical viewpoint. NVIDIA's 52-week high was 153.13, but the issue is the timing of the rebound. In the end, it will surpass the previous high, so that's what I'm expecting. And there's also some positive news. There's also good news from Joystock regarding NVIDIA's stock, as the number of buy orders has increased. Last week, on Friday, May 9th, a buy signal for NVIDIA stock was generated in just the morning hours. The current smart score is 93 points. If that's the case, among all the stocks, it's in the top 0.06%. In other words, the company with the highest fundamentals option is NVIDIA. That's how you can see it. The valuation is significantly higher than appropriate, making it an expensive stock, which is evident. Now, and one more thing, this time we're going to look at the short-term moving average line. On May 8th, the second golden cross occurred. Let me explain this. There are short-term, mid-term, and long-term lines. First, the short-term line has already crossed above the mid-term line, and now, as it crosses above the long-term line as well, the golden cross has occurred twice in a row, which is generally considered a very strong bullish signal. That's what we're seeing right now, and this is how you should interpret it. Out of 26 momentum indicators for NVIDIA's stock, only 1 shows a sell signal, 9 are neutral, and 16 show a buy signal indicating the stock is currently a strong buy. And as a result, NVIDIA's stock chart is currently looking very good. If you look here, you can see that the upward trend has continued steadily since the beginning of this year. The low point and the high point both maintained a similar level, and then a downward trend occurred. But if you look at this part, is there a sign of a rebound right now? So if the current trend breaks through the upper line of the trend, it shows that the trend is completely reversing. And that's why NVIDIA's stock is showing this pattern. So please keep that in mind. Today's final content is today's United States stock market video. Today's video features prominent investors like Warren Buffett and Ray Dalio. Tom Lee has previously predicted a strong upward trend when many experts were pessimistic, and this time his words were also correct. Now, in the current situation, Tom Lee is looking at the overall United States stock market in a positive light, and I'll try to summarize the key points of his remarks for you. That's all for today's broadcast. Thank you to everyone who stayed with us until the end, and I sincerely appreciate your support. Now, from today, the video of Choice Stocks' representative, Kim In-jung, is being posted on the channel. Many people are showing interest, and I'm also looking forward to the valuable feedback from many viewers. We will keep fighting together as United States stock investors until the day we all achieve financial freedom. Have a happy day. Thank you. The news has already been released, so now we'll have to wait and see how various investors react. To put it simply, when the earnings for April 2nd were first announced, the market was shocked. The economic impact was significant, and even in regular news, the stock market crash was a major headline. On some broadcasts, there was even talk of investors selling off all their assets. However, Theodore Strez's tone did not fall into such pessimism. He told his clients not to panic and to hold on, assuring them that the market would likely reach its highest point within this year. And as you can see, we are currently experiencing one of the fastest stock market rebounds in history. Although there have been quick recoveries in the past, this rebound was a truly remarkable turnaround. The person with me right now is Feldstein Global's advisor, Mr. Lee. Since we're in the studio right now, we can't actually ring the victory bell, but in a way, it's not an exaggeration to say that this is almost that kind of moment. By the way, Tom, what do you see as the reason? Why do you think so many people are paying attention to this? I knew the market would fall to zero. It's possible that it could go to zero, but in my opinion, I can explain it with 3 reasons. The first is that unlike the economists who sounded the alarm about the economy, the high-yield bond market did not confirm those concerns. The high yield spread went up to 439 basis points, but if we were really heading into a serious recession, it would have gone up to around 700 basis points. But now it's back down to around 360 basis points. Recently, there was a brief shake-up in the stock market, but as you said, since 1950 out of 18 bear market corrections, 17 of them saw stocks rebound. So it was known that those rebounds were more of a temporary phenomenon rather than a real recovery. 2022 was an unusual exception, and that was because of the rapid interest rate hikes. Next, we are confident about the companies. These companies have already endured a lot through previous recessions, and they have shown strong performance during economic recoveries. Historically, they have also survived the fastest interest rate hike cycles. These companies have performed well even in this kind of environment, and all of the first quarter results and guidance have exceeded our expectations, except for a few outliers. So, we told our clients to hold on and increase their stock holdings, even though it was difficult. I did something I shouldn't have done. I deleted the tweet right away, but by then, my tweet had already spread like this. Actually, you can't really make money just by holding stocks. That was the real meaning of what I said. Even now, I still think that way. That quote was something I heard while listening to a different broadcast, and it really stuck with me. On that broadcast, the host was saying that the guests were showing off their wealth, and it sounded so exaggerated that I just tweeted about it out of frustration. But it became a bigger issue than anticipated. I simply wanted to express my true thoughts. If you're planning to retire in a few months, or if you're not in your 80s, it's more important to steadily manage your assets than to just rush to cash everything out. It's better to stick to the market timing. Of course, your experience will be different if you're a trader or a hedge fund manager, but for investors with a time horizon of 5 years or more, the market is generally on your side. But this time, the correction is due to a strong fundamental factor, so it's a situation where another reality has come to the surface. Several factors were at play at the same time. Even when our market was booming thanks to interest from overseas, those who analyzed the stock market from a political perspective knew that the approval rating for the Democratic Party was over 60%. So, their interpretation of the actions of the White House was mostly negative, and as a result, there were times when the stock market's reaction was exaggerated. Conversely, the bond market experienced the reverse situation. In the world of high-quality bond investors, 60% of the major managers are registered Democrats. So in this case, I think the bond market's original nature is showing more clearly. It's a phenomenon where most influential people in their 30s and 40s tend to lean toward the Democratic Party. If we exclude the top 10 rising days in 2023 and 2024, which many people often emphasize, the annual returns of the S&P 500 are each less than 3%. Again, this means that you have to stay in the market to be able to achieve a solid 20% return. This year, it could be a similar case as before. A lot of people sold their stocks when the 4,083 and now they're getting back in, but they've already missed out on the early gains, about a 20% increase. What do you think about Suhoon's national income? Is this an important issue? If you look at the recent trend, there are still people who couldn't buy at the low point just a month ago and are feeling frustrated. Recently, people decided that they had to get in, but the stock price has already rebounded to a high point and now they're worried it might fall again. That's the situation we're seeing. So, is there any advice you can give to those who bought at the current high point? I think there are a few pieces of advice I can give. Currently, the 10-year government bond yield is at 4%, but this doesn't mean that the government or companies will necessarily face a heavy burden. Companies are able to raise funds to cover their capital expenditures. And if we look ahead to 2026, there are many factors to look forward to. Regulatory reforms are expected, issues related to interest rates are being resolved, financial stability is improving, and cooperation with other countries could also get better. This can have a positive impact on the earnings of American companies. And since the market had already anticipated a rate hike until May, there's no need to expect a big opportunity just because of this. There are still many buying opportunities. Many stocks have fallen sharply, and for stocks that have already been sold, there are still opportunities left. Tesla's Magnificent Seven. This means that there are still various opportunities among small cap stocks. That's right.